So remember, yesterday we talked about errors that affect trial balance. I said arithmetical errors. They do affect trial balance. Well, today we need to talk about errors that do not affect trial balance. So how do we go about these errors? Look at what I said. I wrote, when the trial balance balances, it simply means that the total of the debit balances is equal to the total of credit balances. So your trial balance, like I told you yesterday, it has to balance. So if your trial balance balances, it means that the debit side of your trial balance is equal to the credit side of your trial balance. Okay? Now, it does not imply that the double entry is error-free. If your trial balance balances, it does not mean that there is no error in the trial balance. So errors that we would have in that trial balance, despite the fact that it balances, are those errors that we call errors that do not affect trial balance. Is it clear? Yeah. So these errors, no matter what happens with them, your trial balance will still balance. Is it clear? So what are these errors? Number one, error of commission. Well, what is error of commission? I said this occurs when the transaction is entered using the correct amount and on the correct side, but in the wrong account of the same class. So here, let's start an example that I received cash from Adam. So instead of me to record it in Adam's account, I record it in Adil's account. Do you understand? Yeah. So it still is cash receivable. I received the cash. So normally I'm supposed to debit Adam, I debit. I'm supposed to credit Adam, I credit Adam. I'm supposed to debit cash, I debit cash. But instead of me writing Adam, I wrote Adil. That's what we call error of commission. That means you credited or you debited the wrong name or the wrong account name. Do you understand? That's error of commissions. I said cash received from Adam but credited to Adil's account. Is it clear? Then we have, so this error will not affect your trial balance. You already know that when you receive cash is a debit balance, so it's not going to be Adam or Adil written on it, it's cash. Do you understand? Yeah. Great. Then the second one is error of complete reversal. This occurs when the correct amount is entered in the correct account, but the entry has been made on the wrong side of each account. What do we mean here? You received, this is when a transaction has been done, but you've recorded both transactions, the double entry. What you're supposed to record in debit side of the account, you record it in credit side of the account. What you're supposed to record in the credit side of the account, you record it in the debit side of the account. That's what we call error of complete reversal. What's supposed to be in debit is credited. What's supposed to be credited is debited. So look at an example. I said cash drawings debited to the cash account and credited to the drawings account. When there's cash drawings, you are supposed to debit the drawings account and credit the cash account. Rather, you credited the cash account, then you credited the drawing account, you debited the cash account. So this is what we call complete reversal. Is it clear? Yeah. The third one, error of omission. So this account, it means it's still balanced, right? Yeah. The third one, error of omission. That means you omitted it. You did not even record it at all. So I said, this occurs when the transaction has been completely omitted from the accounting records. No entry was either in the debit side or the credit side. You didn't even make entry at all. So it will still make your balance to balance. Yeah. Your trial balance will still balance because you did not make a debit entry or a credit entry. That means a transaction was totally omitted. It won't affect your trial balance, right? Good. Then the fourth one, error of original entry. This occurs when an incorrect figure is used when the transaction first entered in the accounting records. The double entry will therefore use the incorrect figure. Here, we said error of original entry. Original entry, that means your first transaction. So instead of you to record $100 or $1,000 for goods purchased, you recorded $100. So from the beginning, you've made the error. So it will not affect your trial balance. Do you understand? Because you continue to record the wrong number or the wrong figure that was used initially. So this type of error would not affect your trial balance. Is it clear? Yeah. The fifth one, error of principal. This occurs when the transaction is entered using the correct amount and on the correct side, but in the wrong class of account. Here, the correct account the correct figure is used. This you've recorded what you are supposed to record in debit and debit, in credit, but you used a wrong account. Do you understand? We call it error of principle. For example, we have motor vehicle, and we have motor expenses. Motor vehicle is an asset. Motor expenses is an expenditure. But both asset and expenditure goes to your debit side of your trial balance. So it will still balance.
Yeah.
Do you understand?
Yeah.
So error is been made. There's an error already, but since both assets and expenses are always on the debit side of the trial balance, it will still make your trial balance to balance. Is it clear? And the last one, compensating errors. These occurs when two or more errors cancel each other out. Okay, like purchases account under added by 100 and sales returns account over added by $100. There's an error made. Let's say you made an error with your purchases account. Your purchases account, instead of 1,000, you recorded 1,100 in your purchases account. And your sales returns, it's still coming back to your sales returns, which is going to be on the debit side also. So instead of recording 1,000 on your sales return, you recorded 900. So your sales return has been under recorded as by 100, and your purchases account has been over recorded by 100. So both will cancel each other because both will go to your debit side of your trial balance.
Yeah.
Is it clear?
Yeah.
So these are errors that don't affect our trial balance. Yeah, the exam style questions now. The first question says, the balance of which account may appear on the debit side of the trial balance? They said, which of these accounts will appear on the debit side of the trial balance? We have A, carriage inwards, B, purchases returns, C, rent receivables, D, sales. Carriage inward is a debit because it's an expenses. Purchases returns is what? It's a credit because money is coming back to your business. Rent receivable is an income, so it's also a credit. Sales is also credit, right?
Yeah.
Great. So A is the answer. Question 2, they said, J is a trader. The following balances appear on 31st March. Sales, 86,000. Purchases, 51,500. So normally, when you have the information, it's good you just place them, the debit and the credit.
Yeah.
So then you can post them. So sales, 86,000, which is the credit balance. Purchases, 51,500, which is the debit balance. Bank overdraft is going to be a credit balance. Cash, a debit balance because it's an asset.
Yeah.
Trade payables is a credit balance because it's a liability. Trade receivables is a debit balance because it's an asset. Furniture is an asset, a debit balance. Wages is an expenses or an expenditure, it's a debit balance in a trial balance. Sundry expenses and expenses, so it's a debit balance in a trial balance. Rent payable is an expenses, is a debit balance in a trial balance. Purchases return is an income, so it's a credit balance. Inventory is an asset, which is a debit balance. Drawings is a debit balance. Capital is a credit balance. So that's the posting. Okay, yeah, for the first one. Now, based on what we have here, so sales goes to the credit, purchases here, bank overdraft, cash, trade payables, receivable, furniture, wages, sundry expenses, rent payable, purchases return on the credit, like I told you, inventory on the debit, drawings on the debit, capital on the credit. Then we have our balance, 131,750, 131,750. So that means J's trial balance as balanced, right? Then we have another transaction, which is saying, okay, Saida provided the following list of balances on 30th April 24, but was not able to provide her bank account balance. So there's a trial balance for Saida, but she was unable to provide us with the bank balance. So how do we get the bank balance? So this is the trial balance for Saida. We have it already. Capital on the debit side, 39,200, right? 392,000. Yeah. Drawings on the debit side, which is 18,000. Premises on the debit side, 210,000. Fixtures and fittings on the debit side, 66,100. Inventory on the debit side also 11,950. Trade receivables, which is an asset on the debit side, which is the same as debtor on the debit side. Trade payable is the creditor on the credit side. Loan, which is a liability on the credit side. Cash, which is an asset on the debit side. Sales, which is going to be a revenue on the credit side. Purchases on the debit side. Rates, than expenses on the debit side. General expenses on the debit side. Wages is on expenses on the debit side. So the balance, because we don't know the bank, right? So the balance of these gives us, I wrote it somewhere, let's see. Well, so, I wrote it somewhere anyway, let's just, okay. So when you add all this together, for our credit, 392 plus 12,280 plus 50,000 plus 20,000 plus 157,280 gives us 581,560. So the credit balance in this trial balance minus the debit balance will give us the bank. Because the bank is also going to be on the debit side, right?
Yeah.
So then your credit side will be more than your debit side in this case, because we don't know the bank. So you have to just take the credit away from the debit, then you get your bank. So when you place the bank here, then you have a balance, trial balance in the game. Is it clear?
Yeah.
Okay. That's that about this. That's question 3. Question 2 and question 3. So question 4. It said the totals of a trial balance did not agree. Which error may have caused this? Expenses paid in cash omitted from accounting records. So error of omission. It will make the trial balance to balance. So it is not A.
Yeah.
B. Goods sold on credit to Jones debited in Jensen's account. That is error of commission, so it will still balance.
Yeah.
C. Repairs to machinery debited to machinery account. That is error of principal. It will still balance. Yes or no?
Yeah.
So then the last one. Total of the purchases returns account over cash. That means you added more than what you have in your total purchases account return. That's error of addition, which will not make your trial balance to balance. Is it clear?
Yeah.
Question 5. They said, rent received from a tenant in cash, $450, was entered in the account as $460. How will this affect the trial balance? First, they said rent received. That means we're going to have rent received with cash. So we're going to have rent account and cash account. So your cash account will be debited with the rent, and your rent account will be credited with the cash. Is it clear?
Yeah.
So that means we have a debit balance in trial balance and the credit balance in trial balance. So here they said the options we have. The options available are debit balance cash overstated. No. Cash should be a debit, but rent was received. So cash should be on the credit side. Right?
Yeah.
Cash gave to the rent, right?
Yeah.
So that means A is not an option. And it's even saying no effect. There must be a double entry. So A is not an option. B, cash overstated. Yes, cash has received, they say rent received from a tenant. Cash, it was overstated. Rent receivable overstated. We are supposed to credit cash and debit. We are supposed to credit cash and debit rent. Right?
Yeah.
So the answer is D. So cash overstated, rent overstated. Yes. They said rent received from a tenant in cash. So you debit rent and credit cash. Cash was paid.
Yeah.
Right? So cash was paid. So cash was supposed to be on the credit side. Then rent on the debit. Rent is debited, right?
Yeah.
You received cash for rent. So that means rent receivable is overstated and cash is overstated. You credit cash, you debit rent because rent received the cash. So the answer is D. Is that clear?
Yeah.
Then that's question 5. Then question 6. They said a trial balance drawn up at the end of Jim's financial year balanced. So the following errors were then discovered. So we are told to find the errors. Goods returns to K. Wiston has been debited to K. Wilton. Since it's been debited, that means the account is balanced. But there's an error of commission. Instead of debiting Wilson, you debited Wilton. So that's error of commission. Repairs of office equipment has been debited in the office equipment account. Office expenses is an expenditure. Office equipment is an asset. So they are both debit balance. But here the error is just error of principle. You are supposed to debit an asset, you debited an expenses. So it is what? Error of principle. The third one, an invoice of $1,000 for goods sold on credit to Jacob and Co. had been recorded in the accounts as $100. Instead of recording on the $1,000, you recorded $100. That's error of original entry. Is it clear? Yeah. And the last one, goods purchased on credit from Bristol Limited has been debited in Bristol's account and credited in purchases account. Normally, you are supposed to have, goods purchases. You're supposed to have your purchases account and Bristol's account. But what did you do? You credited purchases account instead of debiting purchases account, because the purchases account has received the goods from Bristol. So it's a debit balance for the purchases account and a credit balance for Bristol, because Bristol gave the product out, right? So here they credited Bristol, they debited Bristol and debited and credited purchases account. So that's what we call error of complete reversal. Is it clear? So these are the type of errors for this. So we're done with chapter 3.